Guys, I'm Shailesh Lakhani. I'm with Sequoia Capital, based here in Bangalore. We're a venture capital investment firm. Um, so I wanted to talk about something that we think a fair bit about. And at Sequoia, we certainly we invest in a lot of companies, but what we really get credit for is when we're involved with a company that lasts a really long time. And we were fortunate to be in the US early investors in companies like Cisco and Apple and Electronic Arts and Google and Yahoo and a bunch of others. Um, and it's fascinating to us how some of these companies survive and some of them don't. So wanted to talk a little bit about building a defensible consumer company. So we're focusing a little bit more on consumer than the description in the program might have said, because I wanted to get to a bit more specifics of things to think about. So actually, would like to keep this as interactive as possible. So if anybody has any questions or agrees or disagrees with stuff, feel free to interrupt as we go along. So this is the metaphorical equivalent of what we want our companies to turn into. So you want to build a big, beautiful castle, that has a big moat, that is, in a company term is just a great, beautiful business. And lasts generations and is something that people can marvel at and is very hard to defeat. But that's really hard to do. And we'll talk about some of the reasons why in some more detail. So firstly, the cost of starting a company. So these are charts here for compute on the top left, storage on the top right, and bandwidth on the bottom. And the takeaway is quite simple. For the past 25 years, there's been an average reduction of 35% year over year on costs in any of these services. And these are the key ingredients that you need to build a tech company today. Looking at the nature of these charts, it's probably safe to say that it will continue for the foreseeable future. So what that means is that a company that starts tomorrow will need to spend 35%, or next year will need to spend 35% less than you do today to build out the same stuff. This doesn't also account for, these charts don't account for that, the fact that you don't need to buy any of the stuff anymore. You can just turn it on in the cloud. And things like software frameworks, like to build a web app with Ruby is way easier than it was ever to build a web app before. Second, there's this new concept of replicators of, when a model of our business model is discovered somewhere in the world, people find out about it, and they look to start this similar equivalent in another geography. This little circle here represents all the Chinese equivalents of major U.S. tech companies. In India, we find when a tech company starts that raises some money, we all see tens of business plans of someone starting that for India. Our Chinese colleagues tell us they see hundreds or thousands for ideas. And when you don't need to sort of think about what the company you're creating is, and you're just picking up a model, it also becomes much easier to just start a company. Another factor that makes it more difficult today is that what we call the J curve in venture capital. The J curve is basically the cash burn that occurs before the company turns profitable. And we take some blame for this, but there's just basically too much venture money available for companies to get going. So this is India venture funding. If you look at the last 3 years, the amount of venture funding has tripled in India, which makes no sense because the economy has not tripled in that time. And the line here represents the number of companies that were funded. So the number of companies actually is not tripled, it's up by maybe 50% over 2 years, over 3 years here. So the average dollars that any given company receives is up almost 2x in the past 3 years. So that just means that your competitor, again, who starts tomorrow or next year, in the last few years at least, has been able to raise a lot more money than you have. And makes it, again, harder to be defensible. Here is something, a chart that many of you may have seen before. But when you build a company, particularly a consumer company, you're probably building it on someone else's platform. So whether it was Microsoft Windows or Facebook or a mobile operating system like Android or iOS, or maybe in the future virtual reality or augmented reality, you're typically using some sort of underlying framework to base your application on. In the past, these applications were these frameworks or underlying platforms lasted for a long time. But the pace of evolution of a framework has been so quick that you don't know how long the underlying platform that you're riding on will last. So if you were writing a spreadsheet for MS-DOS or Microsoft Windows, you being then the leader on when the platform shifted to mobile or tablets or whatever else it might be, there's no guarantee that you will do that. Those platform shifts are where lots of companies get lost. And there's a graveyard of just a few companies we've listed here, but these are companies that all got lost during platform shifts in India and certainly many other parts of the world. And some of you might have seen this on Twitter, but you won't be able to read it here if you haven't seen it. This is just a short memo that came out in 1963 that the CEO of IBM wrote to his team about how a small team of 34 people beat IBM to create the fastest computer in the world at that time. And how he was complaining and commenting that how could this happen? So tech disruption or disruption by smaller, faster, younger teams has been happening for forever. And we should only expect it to continue to accelerate because of some of the factors that we just talked about. Last year, I think a lot of companies tried to raise money as one way of defending themselves. I think the only thing we've learned over the last several months is raising it. You cannot raise enough money to defend yourself against these trends. The cost of computing will continue to drop. There's lots of money available in the world to fund people. It will not be possible to just use even the profits you generate to defend yourself. Also, there's one other big factor that we see has played out over the last several years. And I don't think this existed as much many years ago. So there's the rise of what we think of consumer tech superpower companies. Companies that are actually just so powerful that they let themselves expand into other areas and steamroll other people's businesses. So here is a stock price chart of what we think are three of probably the four biggest tech superpower companies in the West. So there's Google, Amazon, and Facebook in blue, green, and red, which are the stocks that are breaking away from the pack. And the other two lines that you see, the purple and the light blue, are overall all tech stocks. So in the last 5 years, the three biggest companies, along with Apple, have drastically outperformed on the average every other tech company. And I think that's something that you would not normally expect. In tech, you expect disruption, you expect some changes. But in consumer tech, these 3 or 4 companies, and if you do the same chart for Baidu, Alibaba, and Tencent in China, you'd see exactly the same trend. So if you are a big consumer tech company, you have a lot of advantages. Once you've crossed that chasm to be the point where you have either the scale benefits, the network effect, and the distribution, there's a lot more you can do. And it seems to be sort of a fundamental shift that's happened in the market. So there's very good reasons why these companies have been as successful as they have. I'll walk through just 3 of them here. One, this is just, these companies have generated a lot of profit. If you look at this chart here, this is the share of overall smartphone profit that Apple enjoys. They enjoy over 90% of all smartphone profits. So they just make so much more money that they can plow into new products that it's very hard to compete in the smartphone world today. This is Amazon versus all other e-commerce companies in the US in terms of growth rate. This chart is a few years ago, but if you look at the trend, it's exactly the same today. Amazon is accelerating growth in e-commerce the last several years. So they've gotten to some scale where their cost structure is lower than anyone else. And so they can beat anybody else in pricing, and they have the best network and lots of loyal consumers. So they've got to a scale where it's very hard to compete with them. This chart here shows the same thing happening in online advertising. In India, we estimate Google and Facebook account for 60–80% of all ad dollars, and that's actually gone up. That percentage has gone up over the last several years. So this chart just shows here in the US, Google and Facebook, again, the two largest companies, are accelerating growth faster than the market. So they're taking more share from smaller companies. The network effects that these companies have just allows them to do this. One other aspect that we've seen also play out is that in the past, we found larger tech companies to be more acquisitive into entering new areas. Now you see these large companies actually build their way into new areas. So I listed out some examples that I could think of in just a few minutes of areas where people typically you would have expected. Why would Apple launch a music service and not buy Spotify or SoundCloud or something like that? But they did, and they've been quite successful. Why would Facebook build a local service and not acquire Yelp or Zomato or that type of service? But they did. Or Amazon launch restaurant delivery and not acquire an existing Food Panda or Grubhub or another restaurant delivery service somewhere else in the world. And we think it's because these companies also benefit from some of the earlier trends we talked about, that it's way easier to start a new service or a new application. These companies have strong brands and existing distribution, and they already have a very loyal base of customers that they can cross-sell to. So, to sort of sum up all this, we are in a very interesting situation where it is way harder to build a scalable consumer tech company than it has been ever before because of the costs have come down and everybody can do it. There's less need for incumbents to buy you as you build out. These companies like, let's say Amazon has been successful in expanding into India, let's say that they consider that a success. They are more likely to try that again and not buy in the next market. These companies generate a lot of profits. So the way we see it is unless you're very, very special, life is pretty tough as a consumer tech startup. There's lots more things going against you now than ever before. So we wonder what to do. Yes.
So I've seen a slight contradiction to this is in the ML and AI space.
Sure.
Where I've seen a lot more acquisitions rather than companies building their own stuff. Like
Sure.
Apple just bought 3 ML companies in the last few months.
Sure.
Rather than building, even though they had the resources.
Were any of those big acquisitions?
Yeah, about 200 million.
Yeah,
plus.
I mean, might get to 200, maybe even $500 million if you're a very decent acqui-hire. But none of those companies have been able to build a standalone business. And I think there's some contradictions to this, like, look, Facebook bought WhatsApp and Instagram, and we'll talk about some of those things later. But on the whole, we're seeing the big tech companies expand into new areas where they could have bought somebody, but they chose to build it themselves.
Is that because in those sectors the barrier to entry is lower? Like for machine learning, you need a very specialized knowledge, usually PhD stuff. So maybe they cannot afford that many things, and they prefer to buy stuff where barrier to entry is much higher.
Maybe, and maybe ML and AI. There's just a shortage of talent in the short term.
Exactly.
But I'm pretty sure 5 years from now, they won't be buying companies for just talent.
Right.
And I'm quite sure that none of these guys will be buying something very big for in any of these things. I think when we think of companies, we try to think of companies that can get to $1 billion plus in value, and I don't think that they'd be buying an ML or AI company for that.
Right.
It was just talent, at least. You have to build a business.
Right.
Yeah.
Thanks.
So yeah, we think a lot about this. How does a consumer tech company compete in this new world? I think some of the things that you can do or go back to the classics of what Michael Porter might tell you as benefits of competitive strategies. Look at the business school classics. All these are great ideas. And I think many startups don't focus on just the core enough. Second, we think that it's very important to focus on the quality of growth that in a young company. I think we see too many companies just focusing on growth for growth's sake. So one thing that we've seen that some successful folks who invest in, let's say, e-commerce business have done is you don't count the number of customers an e-commerce company has. You count the number of loyal customers, the people who have bought more than 5 times or 10 times. So count like the people who will really matter and stick around. I think NPS also can be a very valuable tool to help measure how happy your customers are. Brand loyalty is something that would come out of that. The other thing is that you have to build something. Does everyone know what NPS is? No. Net Promoter Score. It's a way of measuring how much your customers love you, and how much they would refer you. There's a very simple calculation. You'll be able to find it on lots of places on the internet, but it's a tool to the best companies have higher NPS scores, and it just indicates customer loyalty. We also find that companies are not thinking enough often about to build something really proprietary, something that's really defensible. One example could be that companies like TripAdvisor in the early days focused very much on collecting lots of review content. So the next hotel booking site couldn't, they would always have less content than TripAdvisor, and therefore it was very hard for them to catch up. Zomato, I think, also has a similar advantage. And companies should really think about, what am I doing now that makes it harder for someone who comes behind me to not catch up? What are the things that I should literally, as I'm driving off in front of the road, be throwing nails behind me and make it harder for the next competitor to come and catch up. So, yeah.
You mind if I ask a question?
Sure.
Hi, Shailesh. This is Swadeep. Ginny's consulting. We work with a lot of startups, helping them raise funds and grow and scale, right? So we come across this problem a lot, right? It's like a chicken and egg story.
Yeah.
We work with a lot of early age startups, and they know they have we're looking at innovative product companies, especially when they actually have a true innovation. They want to patent, they can patent in 1 or 2 countries, but we know they have to go global eventually. But then how the patent cycles work, and they're expensive, but they don't have the funding to do that. And then if you don't do that, then later on they don't have the ability to grow as much. So that's an issue we are facing quite a bit. How would you, especially when you want to build a moat around your startup, around something that's proprietary? Patenting is one of the major, areas you need to focus on. How would you address that and help?
I think you'd start with the most valuable markets. Like if you patent for the U.S. and maybe Europe, you're probably 80% there in terms of value, particularly if you're a software company or something like that.
Some mobile, I'm looking at even like Middle East, Africa. There are quite a few countries we can go in Southeast Asia. So costs do. Even if it's 30, 40 lakhs, it
matters in the beginning.
They're bootstrapped. So what do you suggest? Is any...
We can talk offline. I need to understand a bit more of details, but yeah.
Thank you.
But I think, look, the understanding the right metrics at the early stages of what type of growth you're trying to build is super important. Wanted to change the topic a little bit here. And get us to think about, also another aspect of being really successful for the long term. Imagine yourself, or imagine these companies without making these decisions. If Google had not, bought or built Android, Amazon had not built AWS, Facebook had not, bought Instagram and WhatsApp, and Apple had not, built the iPhone. I think all these companies would be a fraction of the size that they would be today. I think we would all probably agree to that. I want to jump back to one of the earlier graphs here that we had. That's because these companies were able to successfully navigate a platform shift. Had Mark Zuckerberg not cared so much about mobile, Facebook may not have done those deals. Had Amazon not thought so deeply about its own infrastructure, it may not have built AWS. So companies being able to navigate that, is something that we think is super important for being able to last the long term. It is quite likely, given how short platform cycles are, that you will face a platform shift in the life of your company. And being able to navigate that is super important. The other important part of this would be that if you look at all these 4 companies that we talked about, with the exception of Apple up until a few years ago, they were still very much founder-driven. So having a founder in the building who can really change complete direction of the company, I think gives you a lot more chance of succeeding. Also, if you look at all these companies, they also had a very core profit stream that kept going. I think you cannot ignore the fact that you always need to keep making money while doing all this. I look at many of the Indian tech companies that have started to expand into other areas. Many of them actually never got to the point where their core business was break even. People point to Baidu and Alibaba and Tencent investing a lot in ecosystem companies in China. We think that analogy is quite different because those companies have got to a point where their businesses are generating a lot of cash and they can afford to invest. But when your company's still losing money, it's hard to take the big real bets that you need to do to protect yourself for the future. So profits is a real sense of power in being able to navigate a longer term business in the consumer world. So in summary, we think actually the best way to be a defensible tech company is not to be defensible at all, or don't play defense at all, is to play offense, is to play for the future, make big bets, to reinvent your business constantly, knowing that what you did yesterday wouldn't work. Look, we see some of the big companies that we talked about recently, just right now, like Facebook, buying things like Oculus, and Google getting into self-driving cars, and Amazon entering India, as big bets that these companies continue to take to continue to challenge themselves because they know tomorrow will not be the same today. And the value of building a really strong company culture to be able to navigate the changes that will occur. None of this is possible without you actually, working to have a team that can, respond to changes that happen in the marketplace. So these are just some of our thoughts on the topic. I would love to hear what people think. We spend a lot of time thinking about this, but we think it's a really important topic for a lot of entrepreneurs.
Given the fact India has the second largest pool of trained manpower in the world, third largest number of tech starters, we are a superpower in terms of technology. Why doesn't India come up with any big product like Facebook, WhatsApp, that kind of software, more consumer driven and more applications all over it?
I think I hope we will. I think we're just.
But what is the reason? Because earlier we were more of a because license and things like that. Since the opening of the economy and one other query is, why isn't Flipkart a profitable company? How do you say such a big company is not profitable, and what is the reason?
On Flipkart, I don't know enough about them or the insides of how they run to comment.
It seems to be such a super consumer company, but still not profitable, isn't it?
Yeah. Flipkart, you would probably need to ask them or someone who knows them.
Oh, somebody will answer there? Okay.
I don't know.
Okay, thank you.
Hi. Hello.
Yep.
Over here. Hi.
Okay, yep.
So I have like a two-part question. The first is, you said that companies need to take a risk so that they could grow larger and so on, but there's companies that have taken a risk that have not really succeeded because of it, like Sony, that just gave up on its Walkman idea, and then they just went through Xperia and then the Walkman phone, and they didn't really expand in that area. They tried to push it in that way, but didn't really go through. So where do you think that the pitfalls actually lie when you actually say you need to take a risk? Because that's such a broad, generalized statement, right? Like you have to say, that's the first part. And the second part is related to the question that the lady asked earlier as well. And that is, if you have Indian companies, I wouldn't say can't come up with ideas like Facebook. I think they can, and they do all the time. But how do they actually reach out to the markets that are important to them? Because being in Silicon Valley, you have a far greater testing rate, and you have a far greater expansion rate as well. But being in India, the pool is only driven down to places like Bangalore, Hyderabad, Bombay, and Delhi. So how do you push it forward towards a more global marketplace so that they start to what's the right word? They start to like imbibe the product that we're trying to sell in a faster way. How do we make the product sell faster in a global sphere and not focus to be so India-centric? And that's related to Flipkart. Why can't Flipkart move out of India? Why is it stuck in India? You know, so how can it become an Amazon in the future?
So on the first question, we see the big companies taking lots of bets, and many of them don't work. So I think if you try to look at the number of failures in products Google's had, there's a very long list. Maybe Google Plus is the one that is of a lot of most notoriety recently. But they fail very often. So they try many things. I would argue that Sony stopped trying in the mid-90s and didn't build very much new stuff after that. Maybe the exception of the PlayStation business. Not too much new stuff came out of Sony. Whereas there was a lot more that was possible. If you read about the early days of Apple, the company that Apple was most scared of or most compared itself to or in awe of was very much Sony. So I think you have to continually be okay to take lots of bets and know that you'll lose many of them. On why India doesn't have these companies or why India, the market here, I think it's a function of, like you said, there's less early adopters here. There's less people to try it out. We're a bit behind in some of the infrastructure required to do this stuff. We're just getting 4G for real in the last few months, and so if you haven't experienced that, it's hard to imagine what kind of applications you could create for 4G, for example. But as we catch up, I think you'll see many new companies be created. If I was to switch tracks a little bit to enterprise companies, I think you see a whole raft of software as a service companies that are being created out of India that are winning globally. And we think we'll see many more there. And because I think the infrastructure between here and the US is a much more level playing field for all people to innovate on.
And also about, let's say, some kind of competition. So there's a competition, but 3 or 4 players, for example, collaborate, towards a common goal, and that gives some leverage to some of these companies. To just give you an example, for example, right, Netflix competes with Amazon Prime, but Netflix still uses AWS because the way AWS is, let's say, built, and some form of that. For example, many operators in India share the actual infrastructure of network, right? Telecom calls, basically. The actual this thing is shared by many operators. So I think those aspects also make you probably help you in defense, right? Would you agree?
I don't know if they help you in defense. I think those are just smarter, more efficient ways of operating a business. Okay. Rather than Netflix rebuild a cloud, or they use what they think is the best cloud, and tower sharing happens in all markets because it's too expensive to build out towers for every individual company.
Okay.
Shailesh, could I take this?
Sure.
So say you have 2 companies, say Company X and Company Y. Both are tech companies, and Company X is bootstrapping, and Company Y is very well funded. So what would your advice be to Company X in building a really good defense strategy against the Company Y?
Look, I think sometimes you might need to raise money to compete, just because if the funded company is moving faster and has access to better talent or resources or salespeople or whatever it might need, then it might make sense to raise money. Yeah, it depends on the market. Well, one of the things I didn't talk about that I actually wanted to mention was I think companies like press and PR too much and aren't quiet enough about their achievements. I think there's numerous aspects of Google that we don't know how it actually works underneath. Or if you actually try to figure out how does Amazon make money, where do they actually make money in their business? There's so little that they actually release publicly about the insides of their business. Like if you have a great idea and you're bootstrapping it, just be quiet. Don't tell anybody. and enjoy it till you get to a point where you're at a scale where you can fight off the funded guy who comes after you or the next guy, because it's you don't need to talk about it today. Shailesh ji.
Hi.
Yeah.
To reach 40 million people online, Shopify is one of the best integration platform.
Mm-hmm.
To reach 1 billion users, which is the best application platform?
I don't know.
Like, what would you name few of the top?
I think there's only 2 or 3 apps that have reached 1 billion users.
No, the companies. Like Shopify is an integration platform which I can use to create a website.
Yeah.
So for reaching 1 billion plus user, which company app I need to use? To develop the app, which company platform I need to use? Could you like just name the top?
Facebook and WhatsApp are probably, and maybe Google are the only companies that have that many users. Is that what you're asking?
No, I'm asking, you have said like on your presentation, 1 billion mobile users are there.
Yeah.
That is the market reach and potential of reaching the maximum amount via selling on mobile.
Yeah.
Oyo and other Ola apps are integrating that thing in their core business.
Yeah.
So I'm planning to open start a startup where I want to have an app.
Maybe we should chat after.
Oh,
Otherwise,
great.
yeah.
I got it.
Yeah.
Yeah. Shailesh,
Yeah.
I have a question. You mentioned about TripAdvisor
Yeah.
and the competitive edge that they have in terms of generation of content,
Yeah.
which was a entry barrier for other players.
Right.
At the same time, the scalability is also an issue. Let's say I do a similar kind of a model in Bangalore and someone else do a similar kind of a model in Mumbai. When I move to Mumbai, I face the similar kind of a challenge.
Yeah.
How do you see addressing that?
That's a tough part. As in, if someone copies your model, I think, look, Groupon faced that, Uber faces that, Airbnb faces that. Many companies face that people take their model in other places. You can see what approaches different people have taken. Uber has chosen to compete in every market. Airbnb has mostly decided to compete in every market. Groupon ended up buying a few companies here and there. I think there's lots of different approaches you can think of. It's more dependent on how fast you can grow relative to your competitor. Yeah, we do. We worry about that a lot. That can you that determines how big your market is. If you're a city or a country-based business, that has a big impact.
Hi, Mandy this side. Yeah. Hi. You gave very good insights on consumer-facing applications in terms of network effects and how companies find it easier to build because it's the same level of entry barriers that everybody has now. So can you give a little bit insight more into B2B facing companies in the terms of network effects, especially considering it's very hard for especially startups to get into that kind of network selling to businesses and so on?
So I think in B2B, like particularly, let's say you're selling software, for example, it's harder to build a network effect because companies don't want to share with the next person, with the next competitor, potentially. And they value or value their data much more than an individual does. So in B2B, we just see fewer companies with network effects, but there are certain models that lend themselves to it, like if you're building a credit bureau or a B2B marketplace, there might be some network effects. We wanted to get a little more specific here. That's why we talked mostly about consumer companies. I think B2B companies, much more of the answer is it depends. So it's harder to make generalizations that are useful for this kind of presentation.
Hi, Shailesh. Hi, Shailesh. Gaurav here. I think you make a super point about going on a good offense. I think good service can be a superb offense.
I agree.
And I think that's why some of the larger companies will not buy. For example, like maybe an Amazon, when they come into India, they may not buy a Flipkart because to replicate good service is very difficult. And when you buy a company, you generally inherit some of those problems. Like I would always buy from Flipkart, and once I had an issue, and they create a lot of trouble. And some months later, I had a problem with Amazon, and they did a fabulous job with dealing with the issue. And then after that, I decided that I'll just buy from Amazon.
Yeah.
And I think.
No, I think customer loyalty and lots of happy customers is a big differentiator. It's a big barrier for the next person. If you're satisfying your customers, they don't have any reason to look elsewhere.
Absolutely.
Yeah.
In a software as a service model, what do you exactly mean as an offense? Is it a scale? Because for each attaining scale also you need a funding, and in that case you come into the public consideration. So how
So
to
mostly was talking about consumer companies, so less about software as a service companies. SaaS companies, I think, just tend to be, the customers tend to be more sticky, and there's less chance of you losing them as long as you don't screw up.
Definitely the churn rate is less, but in that case, how a company can go with the offense strategy? So creating or removing the competitors from the market, or not letting the
I think it's hard to beat or remove a competitor from the market in the SaaS world. You probably have to find new markets or try to find ways to expand your market.
Thanks a lot. Thank you.
We'll take 2-3 more questions.
Yeah.
Please go ahead.
Shailesh, recently I came across a study about OYO rooms. Like they are spending around 24 crores. Means their total income is around 19 crore per month, but they are spending around 24 crore per month to get the customers, new customers, and retain the old customers. It's look like they are loss company, right? So every month 5 crore loss, but still ventures are how they are interested to invest again and again on these companies.
I don't think we should talk about any specific companies' approach.
Yeah, it's just a case study I studied, so I thought.
Yeah, I'm not super close to OYO, and I think they're growing quite well. So their burn probably is quite justified. But we probably shouldn't go into any specific company.
Good evening, Shailesh. Just one question. You mentioned in your presentation regarding companies liking PR in media. Is that a good thing?
Sorry, I didn't hear what you said.
Companies liking PR in media.
Yeah.
Yeah, is that a good thing? Is that a bad thing? And PR in the US or in Europe compared to PR for startups in India?
I think the greater point was you use PR effectively and in a way that benefits you. Just being very excited that you got to, let's say, 100,000 users in your company and doing PR may make you feel good and get you some tweets and Facebook likes, but it may not do anything for your business and may just invite a competitor. And that might have much more harm long term. Not saying that you don't use PR at all. If you look at WhatsApp, for example, they only released, before they got acquired, they only released the number of users that they had maybe twice in their history. And they had known, obviously they're growing quite quickly and there's lots to feel proud about along the way, but they just never talked about it. And it would have just drawn unwarranted attention. So you have to sort of leave your ego a little bit aside and just be happy by the numbers, but who cares if anyone knows about them outside? Probably better if they don't. We'll take a couple more.
Yes, I have a question. You said that customer tech companies are hard to compete against, right? Now we have emerging markets, right? And there are so many people, even in India, there are people who are getting onto the internet as well as getting mobile for the first time. And they are probably not on the radar of Amazons and big companies. So would it be a good difference if we build a product which is really made for such people who are coming for the first time?
Yeah, I think so.
And catch Amazon's off guard.
Agreed.
By creating a big market there.
We think that's a great way of doing it. Yeah. Last one.
Something like e-commerce companies may have been unheard of about in 10 years back, a decade ago. I don't think anybody would have believed it would have gone to this scale in India. So what trends do you see in future in the software industry in India, and trends in terms of technology as well as innovation?
We see a lot more software product companies, for example, serving global markets. So SaaS companies that a few people have talked about. We see a lot more, as the previous question was, a lot more people doing things that are unique or innovative for India or other emerging markets. We see, look, I think in reality, I think India's internet is still very small. It doesn't cover probably more than 10% of the population on a daily basis, despite all the press. So it's hard to imagine, I think, some of the applications that will be created when you have 50, 60, 70% of people online.
Thank you very much.
Hi Shailesh, this is Amol here from EVA. So we have been discussing about Amazon, Google, Facebook. So I come from a company like we are a 5-year-old technology company, and we find it really difficult to be defensible in this market. So as a VC, what do you see or what do you want to see in a startup, or not even startup, like a small technology company which can be defensible maybe 10 years down the line? So what seeds or what traits you need to like you gauge for a company like ours?
Yeah, I think some of the core things that we look for, are you building any sort of network effect? Do you have very happy customers? Do you have sort of switching costs for your customers? Just the core things that exist in any good business. Are you focusing on more than just vanity metrics and just regular growth metrics? Are you looking at the real health of the business? Those are some of the things that we would look for.
Thank you, everybody. I think we should thank Shailesh with a great applause for all the insights that he has given us.
Thank you, guys.
Any last words, Shailesh?
No, thank you, guys. Appreciate it. I'll be around for a few more minutes.
Yeah. So you'll be around. Thank you, everybody.
OnGrid is an Aadhaar-enabled digital trust network, and it is used to establish trust of an individual.
We are building a marketing automation platform wherein businesses can come on our platform and then integrate all their marketing and sales applications at one place.